since our last update, it's still a tale of two markets. Year to date, international and emerging markets have outperformed the US, and particularly for the US, this is outside of AI and tech related names. So, generally, the market has been in a waiting mode to see what might be the impact of tariffs and also what might be the next steps for the US Federal Reserve. In the US, the macro picture has been a bit mixed. Inflation showed some signs of cooling at the consumer level in July, but at the producer level was surprisingly higher. And this could suggest that tariffs are being absorbed right now by businesses. The labor market in the US softened in the last couple of months, but this was from a very strong base. So these data points are important because they are a bit conflicting for the US Federal Reserve, as the Fed has a dual mandate of price stability and maximum employment. But even with the conflicting data, the market still expects the Fed to cut rates soon. But some of this expectation may be partly due to White House pressure. So back to the tale of two markets, this earnings season was a bit mixed. Tech remained the driver of earnings growth for the broad market and also the driver of equity performance. But in the last week or so, some of the lagging sectors in the US caught the attention of investors like healthcare. For our funds, the US holdings have lagged their broader market, while non US holdings continue to add to their strong performance so far for this year. Looking at our fund performance year to date, the World Growth Fund was up 11% and the World Fixed Income Fund was up 3% at the last valuation date. For our Barbados dollar investors, the Caribbean Growth Fund gained 9% and the High Interest Fund up 3%. Both the Caribbean Growth Fund and the High Interest Fund reached all-time highs last week. For the World Growth Fund and the Caribbean Growth Fund, global diversification has been an advantage this year so far, and specifically for the Caribbean Growth Fund, a few of the Caribbean stocks that had been a drag on the performance there bounced off their lows last week and supported the returns in the Growth Fund. And that's it for me this week.